Hey folks, I hope you're doing fine. I'm Simo from Investment Research, your equity research analyst, and today we're doing a complete analysis of SoFi Technologies as of November 5th, 2025. Now, I want to give you a complete overview snapshot of what's happening with the company so you don't have to watch other videos, so I just invite you to subscribe if you would like to. If you listen to my analysis, you're getting the complete picture. Like I'm an employee from SoFi giving you the insider perspective on what's really going on. We're covering the current price action, where the stock is headed based on technical and fundamental analysis, and what are rumors of Wall Street traders and what institutional investors are looking for too, and most importantly, what you should be doing right now if you own this stock or are thinking about buying it. Okay, let me start with where SoFi is trading right now on November 5th, 2025. The stock is currently around 29.37 and we're seeing some consolidation after the massive post-earnings rally that took the stock to an all-time high of $32.57 on October 29th. Now this pullback is completely normal and healthy. The stock is down about 9% to 10% from that all-time high, trading in the $29 to $30 range. For context, SoFi has experienced 42 moves greater than 5% over the last year, so this type of volatility is par for the course. The 52-week range tells you everything about this journey, from a low of $8.60 all the way to $32.57. That's nearly a 4-house move from bottom to top, and we're currently sitting much closer to the highs than the lows. The year-to-date performance is still absolutely insane. SoFi is up approximately 100% plus for the year, and over the trailing 12 months, the stock has gained about 177% to 200% depending on which time frame you measure. The market cap is sitting around $36 billion, which represents a massive revaluation of this company over the past year and a half. The stock has a beta of 2.36, meaning it moves with more than twice the volatility of the broader market. So when fintech and growth stocks rally, SoFi flies, and when they sell off, SoFi gets hit harder. Now, let me talk about the technical picture because this is important for understanding the near-term price action. Based on the latest data, technical indicators are showing 16 bullish signals and 10 bearish signals as of November 5th. The current sentiment is neutral, which makes sense given we're in a consolidation phase after hitting all-time highs. The Fear and Greed Index is showing 39, which indicates fear in the market. But historically, that's when buying opportunities present themselves. The stock has recorded 14 green days out of the last 30, or 47%, with price volatility of 5.25% over the past month. From a support and resistance perspective, the stock is currently closer to resistance at $30, which is only about 2% above current levels than it is to support at $28.14, which is about 4% below. Several forecasting models suggest the stock could reach a high of $30.10 within the next few days, representing about 2.5% upside from current levels. However, a sell signal was issued from a pivot top point on October 28th when the stock started pulling back from the all-time high, and so far it's fallen about 6% to 10% from that peak. Technical analysts note that further consolidation is possible until a new bottom pivot is established. The key support levels to watch are 28.14 and below that 27.14, and if those break, the next support from accumulated volume sits at 25.62. On the upside, if SoFi can break through the $30 resistance level with conviction, the next targets would be $32 to reclaim the all-time high, and then potentially $35 to $40 based on some of the more bullish technical setups. Several traders on TradingView are noting that the stock looks strong on charts with a successful breakout and retest of triangle patterns, suggesting the potential for a move toward $35 and eventually $40 if momentum continues. Now, let me talk about what's driving this incredible performance because the fundamentals are the real story here. SoFi reported absolutely blockbuster Q3 2025 earnings on October 28th that crushed expectations across every single metric. Adjusted net revenue came in at $950 million, up 38% year over year, beating analyst estimates of $904 million. Adjusted earnings per share hit 0.11, crushing the consensus of 0.08 by 37.5%. Adjusted EBITDA reached $277 million with a 29% margin, up nearly 50% year over year. Net income was $139 million with a 14% margin, marking the fourth consecutive quarter of positive earnings. The member and product growth was absolutely exceptional. SoFi added a record 905,000 new members in Q3, bringing total membership to 12.6 million, which represents 35% year-over-year growth and actually an acceleration from prior quarters. They added a record 1.4 million new products, reaching 18.6 million total products, up 36% year-over-year. The cross-buy rate hit 40%, the highest level since 2022, which shows that SoFi's one-stop-shop strategy is working brilliantly. Customers aren't coming to SoFi for just one product, they're using multiple products across the platform, dramatically increasing lifetime value. The revenue mix is shifting in exactly the right direction. The financial services and technology platform segments generated $534 million in revenue, up 57% year over year and now representing 56% of total revenue. Fee-based revenue specifically hit a record $409 million, up 50% year over year, now accounting for 43% of total adjusted net revenue. This transition away from capital-intensive lending toward capital-light fee-based revenue is why operating margins improved to 15.4% from 9.2% a year ago. This is a fundamental transformation of the business model that makes SoFi more profitable and more valuable. Management raised guidance significantly for the full year. SoFi now expects to add approximately 3.5 million new members by year end, up from prior guidance of 3 million, representing 34% year-over-year growth. They're projecting adjusted net revenue of $3.54 billion, up from $3.375 billion previously, equating to 36% growth versus the prior guide of 30%. Adjusted EBITDA guidance increased to $1.035 billion, and adjusted EPS guidance was raised to 0.37 from 0.31, a 19% increase. These are not small tweaks, these are meaningful raises that demonstrate management's confidence in the trajectory. CEO Anthony Noto was extremely bullish on the earnings call, and his comments matter because he's been executing flawlessly. He said, SoFi delivered an exceptional third quarter, fueled by the strength of our innovation and the power of our one-stop shop strategy. He also announced that the company is stepping on the gas to accelerate investment in existing businesses and entering new areas like crypto and blockchain, AI, SoFi Pay, providing fiat and crypto banking services, and so much more. Let me talk about these new growth initiatives because they are significant. First, SoFi is launching buy, sell, and hold crypto by the end of 2025, tapping into the massive crypto market at a time when institutional and retail interest is accelerating. Second, they're rolling out SoFi Pay to additional international markets. SoFi Pay is a blockchain-based global remittance product that could be huge for cross-border payments, a market worth hundreds of billions. Third, they launched an agentic AI exchange-traded fund on their investment platform, leveraging artificial intelligence for portfolio management. Fourth, they're expanding level 1 options trading, giving customers more sophisticated investment tools. These aren't gimmicks, they're strategic moves into high-growth adjacent markets that leverage SoFi's existing platform and massive customer base. One data point that's incredibly bullish for the long term is brand awareness. Unaided brand awareness reached 9.1% in Q3, up from much lower levels a year ago. Think about what that means. Only 9% of Americans can name SoFi without prompting. For context, Chase, Bank of America, and Wells Fargo have brand awareness in the 80% to 90% range. If SoFi can get to even 20% brand awareness over the next few years, the member growth potential is absolutely enormous. This is a company that's still in the early innings of its growth story despite the massive stock appreciation. Now, let's talk about what Wall Street analysts are saying because the response to Q3 earnings was overwhelmingly positive with multiple price target increases. Needham raised their price target to $36 from $29, maintaining a buy rating. Mizuho raised their target to $38 from $31, also a buy rating. Citi raised to $37 from $28. Goldman Sachs raised to $27 from $24 with a hold rating. UBS raised to $27.50 from $20.50. JP Morgan raised to $28 from $26 but maintained a neutral rating. Even the more cautious firms are raising targets, which tells you the fundamental story is undeniable. The consensus rating from analysts is hold, but that's based on 10 buy ratings, 13 hold ratings, and 3 sell ratings. The average price target varies by source, but most estimates cluster in the $27 to $38 range, with some outliers on both sides. What's interesting is the wide dispersion, which tells you Wall Street hasn't reached consensus on how to value SoFi. The bears argue the stock ran too far too fast, competition is intensifying, a recession could hurt loan demand, and valuation is stretched. The bulls counter that SoFi is one of the only fintechs executing profitably at scale. The fee-based revenue transition makes the model more durable. The addressable market is massive with only 9% brand awareness, and the company is just getting started. Looking at price forecasts from various models, there's significant divergence which reflects the uncertainty around execution and macro conditions. Some models suggest SoFi could trade between $35.60 and $41.41 over the next 3 months, with a 90% probability representing 29% upside from current levels. Other more conservative forecasts show a range between $20.96 and $30.97 for 2025. One analyst at Motley Fool made the bullish case that SoFi could be a $100 stock within 5 years if management continues executing, driven by explosive growth in the loan platform business, which nearly quadrupled from Q2 to Q3. Home loan growth of 93% year over year, which could accelerate if mortgage rates fall, and potential opportunities from privatization of the federal student loan portfolio, where SoFi is one of the few companies with technical capabilities to service private student loans at scale. However, I need to address some concerns because it's important to look at both sides. First, insider activity over the past 6 months shows 9 transactions, all of which were sales with 0 purchases. Key insiders, including the CTO, board members, and executives, have been selling shares. While insider selling doesn't necessarily mean trouble, insiders sell for many reasons. The lack of any buying when the stock was lower does raise a yellow flag. If insiders truly believed the stock was dramatically undervalued, you'd expect to see at least some buying. Second, institutional activity is mixed. In Q2 2025, 422 institutional investors added shares while 299 decreased positions. Volaridge Investment Management added nearly 8 million shares, a 92% increase. Bank of America added 7.5 million shares, up 65%. On the flip side, Susquehanna International Group removed nearly 7 million shares, a 71% decrease, and Cube Research completely exited their 6.3 million share position. This tells me smart money is divided, with some institutions betting heavily on the story and others taking profits after the massive run. Third, valuation is no longer cheap. SoFi is trading at a market cap of $36 billion with trailing 12-month revenue of approximately $3.5 billion, putting the price-to-sales ratio around 10 to 11 times. For a company growing revenue at 36% to 38% year over year and profitable, that's not outrageously expensive, but it's also not cheap. Traditional banks trade at 2 to 3 times sales but grow at low single digits. High-growth unprofitable fintechs trade at 5 to 8 times sales. SoFi is in a unique category, high growth and profitable, which arguably justifies a premium, but the easy money has been made. Now, let me talk about the key risks investors need to understand. First, volatility. With a beta over 2.3, if you can't handle 20% to 30% swings, this stock isn't for you. Second, competition in fintech is intensifying from both traditional banks going digital and other fintechs expanding offerings. Third, a recession could hurt loan demand and increase charge-offs, though SoFi's high-quality borrower base provides some buffer. Fourth, regulatory changes could impact digital banks unfavorably. Fifth, execution risk on new initiatives like crypto, blockchain, and AI, where SoFi is entering crowded markets. And sixth, valuation leaves limited room for error. If the company disappoints on growth or profitability, the stock could get crushed. So what's my assessment as an equity research analyst looking at SoFi on November 5th, 2025? This is a company executing exceptionally well across all metrics. The Q3 results were outstanding. Guidance was raised significantly. The business model is becoming more capital light and profitable. Credit quality is strong with charge-offs declining. And management has a clear growth vision. The one-stop shop strategy is working with a 40% cross-buy rate. The addressable market is massive with only 9% brand awareness providing a long runway. The new initiatives in crypto, blockchain, and AI could be meaningful revenue drivers in 2026 and beyond. The company achieved a Rule of 40 score of 67%, which is the sum of revenue growth plus EBITDA margin, putting them in elite company among fintech and software businesses. However, the stock has priced in a lot of good news already, up over 100% year to date and pulling back from all-time highs. We're in a consolidation phase. The valuation at 10 to 11 times sales is fair for the growth rate, but not cheap. Insider selling and mixed institutional activity suggest even sophisticated investors are divided. The technical indicators show the stock is testing support levels and needs to establish a new base before the next leg higher. My rating is hold for existing positions and wait for better entry for new positions. If you already own SoFi and you're sitting on massive gains, hold the core position, but consider trimming 10% to 20% to lock in some profits and reduce risk. The fundamental story is intact, but after such a massive run, taking some chips off the table is prudent. For investors looking to establish new positions, I would not chase the stock at current levels. Wait for a pullback to the $25 to $27 range, which would provide a 10% to 15% margin of safety and a better risk-reward entry point. Given the volatility in this name, that opportunity could present itself within the next few weeks if broader markets pull back or if there's any negative news flow. The key catalysts I'm watching going forward include technical confirmation of a new support level around $27 to $28, the launch of crypto trading and whether it drives engagement and revenue, progress on SoFi Pay expansion internationally and adoption metrics, Q4 earnings in early 2026 to confirm the raised guidance trajectory, brand awareness growth and whether member acquisition accelerates, credit quality metrics, especially if economic conditions weaken, and any announcements regarding the federal student loan privatization opportunity, which could be a massive revenue opportunity. One analyst perspective I want to highlight comes from a top investor who said this about SoFi. Just the beginning. The thesis is that SoFi's loan platform business is exploding, nearly quadrupling volume from Q2 to Q3. The home loan business is growing 93% year over year and could accelerate dramatically if mortgage rates fall as expected in 2026, and the company is positioned to benefit from potential privatization of federal student loans under policy changes. If these three drivers play out as expected, the current stock price could look cheap in hindsight despite the massive run. Let me give you some perspective on where this stock could go. In a bull case scenario where SoFi continues executing at this level, growing members at 30% plus, expanding EBITDA margins, and successfully launching new products, the stock could reach $40 to $50 over the next 12 to 18 months. That would represent 35% to 70% upside from current levels. In a base case where growth moderates slightly but remains strong and profitability continues expanding, a price target of $35 to $40 seems reasonable, representing 20% to 35% upside. In a bear case where competition intensifies, a recession hits, or execution stumbles, the stock could pull back to $20 to $25, representing 15% to 30% downside. Given the risk reward, I favor waiting for a better entry point rather than buying at current levels. Alright folks, that's my complete analysis on SoFi Technologies as of November 5th, 2025. This is a high-quality fintech company executing at a very high level with multiple growth drivers ahead. The recent pullback from all-time highs is healthy consolidation. For long-term investors with conviction in the fintech disruption story and SoFi's ability to become a dominant digital bank, the next few years could be extremely rewarding. But for traders and new investors, patience is warranted. Let the stock establish a new support level, let some of the froth come out, and then look to enter on weakness. As always, do your own research, understand your risk tolerance, and never invest more than you can afford to lose, especially in volatile growth stocks like SoFi. Thanks for watching, and I'll see you in the next analysis.